Hi, my name's Nick Hawtin, and I'd like to welcome you to the 5th and final day of Green Impact Week. I'm joined here with four guests, 3 in the studio, 1 online from Amsterdam, I think it is, to talk about the challenges in SDG StartUp investments. And so we've got 2 investors. They're the chaps at either end. We've got 2 startup CEOs who've raised lots of cool cash here in the studio to talk about the challenges and the opportunities in raising money and how to do it. And hopefully we're going to come up with a bunch of really concrete tips for you out there at home. And we're going to be concise. You're welcome to be funny. And I'd like to hear a lot of examples, because what we're looking to do is for you at home, is for you out there in the internet and here in the building, is to be able to connect with the advice that we're giving and the experience that other people have gained. Yeah? All right. If we could take it from my right to my left. Artem, if you could give us a quick one line of who you are and why you are with us today.
Hello, everyone. Can you hear me well?
Yes, we can. I'm very glad to be able to say that. Yes. And I'm looking over here because I see you on the screen.
Very pleased to meet everyone. My name is Artem. I'm an investor at Rockstart, working with startups that are looking for funding from the fund. My main responsibilities is identifying the right opportunities for the fund and create those for the startups that are coming in. Very happy to be here and very happy to talk about challenges and opportunities in SDG investments.
Super. And real quick, what sector do you look at? I mean, we say SDG, but I mean, impact is pretty broad. Do you have any specific sectors you're looking at?
The best position here is to look everywhere. Everywhere is happening lots of interesting things, and yeah. If I would choose one, I would look into dairy quite closely. That's my favorite one.
Dairy. Did you say dairy as in cows? All right.
As in cows, yes.
Excellent. Cows. Big animal. Got lots of interesting things that they do. Very tasty animals, too. Josephine.
Yes, my name is Josephine. I'm the founder of Tripdoodler, and we are enabling sustainable travel choices for consumers.
Cool. You're also raising money.
I'm also raising money.
How much money are you looking for, and what are you going to spend it on?
We are in the beginning of our fundraising journey, and we are raising for $500,000 in a pre-seed round. And we're going to spend the money on developing our sustainability algorithm that enables the consumers to share sustainability without actually being experts on it indirectly in the planning.
Cool. Solveig, you've raised money.
Yeah, so my name is Solveig, and I'm the CEO of a startup called Råhandel, where we bring together small food producers and their customers within hospitality, retail, and food service. So it's an online marketplace where we gather ordering and logistics and payment. And actually, Rockstart has invested in us in November when we raised our first round, which was a seed round of 1.4 million euros.
Lovely to hear real amounts. Yeah, so when I say real amounts, just for a really long time in the impact world, we were dealing with pennies. It was 100,000 euros here and 100,000 euros there. It is great to see the development. I think that needs to be recognized, the development in the industry where it's the investment sizes are online with the rest of the startup industry because money is the lifeblood of startups. Cool.
Yes, my name is Anton, and first of all, I'm very happy to be here and to learn from all of you cool guys. I'm the CEO of CVX Ventures, which is a fairly new venture investor in Denmark. Over the last year, we've invested in more than 20 companies, and we invest in all types of companies. So that means we're fully agnostic in terms of industry, also fully agnostic in terms of stage. However, our own team, I think we're 12 now, all of them have backgrounds within entrepreneurship, and combining all of whom we are, we've raised more than 2 billion Danish crowns. So we have quite a lot experience with raising money, both within the SDG impact sector, which is what we talk about today, but also just within, I think what you also have to be aware about the fact that investors just solely look for good investments. So I'm here today to learn, and also, of course, to give out what I've learned so far.
Cool. All right. So we've introduced all the players. I'm Nick Hawtin. I'm here because I'm a startup ecosystem guy in the region. I know all of these people, and I frequently moderate this type of thing. And maybe because I'm only half Danish, I like to ask tough questions and push you guys a little bit more than you often get pushed up here. Forewarned is forearmed. All right. With let's see. With these questions, everybody said they're agnostic. We're looking for the best deals, and it sounds a little bit huggy, fuzzy. Yeah. At the same time, you've only invested in 20 companies. Yes. You say you've invested in 20, but you met thousands more, probably, yes. Thousands of cases that you didn't invest in.
Yes.
All right, good. So so from the startup side, there are a lot of frogs out there to kiss, but with the best one in the world, you can only kiss so many frogs. Yeah. Yeah. How do they research you guys best? When we're swiping through Tinder, what are we not looking for? For the ladies, it's often the fellow with the big tattoos or the big motorcycle or the, the one that's holding a beer. Or, what are we, when they're looking at you, what should they be catching with you before they contact you?
I think in the whole venture capital scene, introductions are key. So that's just one thing, but I think it's also very I think it's nothing new that I bring under the sun.
Yeah, but so give us some examples.
Yeah, so I mean, whenever we get cases in, we look at around 80 to 100 cases per month, and we have a team of 5 people, so they're looking at quite a lot of cases, and they work a lot of hours in the office. The best way to get in is through somebody we know, because we only have limited time. So as you said, we only can kiss limited amount of frogs. We need to know when a case comes in, is this a case that we should spend time on or not? And
so an example of introduction matters. Is it, so if, let's say, one of your portfolio companies, if I know somebody at a portfolio...
Yes. Could be that. It could be, we have a network of 460 partners, as we call them. It's investors whom we invest with. Introductions through them is actually better than one of our portfolio companies. Our whole list is available on our website, so just go there and see who can do introductions for me. That's one thing. The other thing is being flexible to jump on a call, because we also do get a lot of introductions. So an introduction isn't enough. The flexibility to be able to just jump on a call and the proactivity to jump on a call is actually what makes it quite much for us, because when all comes to all, my investment managers, they're just people. Just pick up the phone to whomever who calls, and it's just really important that we fall in love with the teams rather than the idea. And I think that's one thing that at least a lot of the entrepreneurs that we work with, and also ourselves in the past, we sort of neglected the fact that teams just mean everything. And for us, yes, of course, we're looking at the financials, but before we do that, we look at the team, first of all. Then we look at the commercial. Then we look at the timing. And then last, we look at the financials.
Solveig, how do you get your first investor? You raised 10.5 million crowns last year. How did you meet him?
So actually through Rockstart. So we were part of the accelerator.
Okay. The first that was here in Copenhagen at Matrikel 1 down on Herborg.
Exactly. So we were part of that accelerator. And then I met our chairman there. And there was also, it's not an introduction, but I think why introductions matter is because it's all about personality match. And that's why you need the introduction, not because it's necessarily a validation of the company, but because it's a validation of the founder, that somebody wants to do the introduction, because you spend so much time together with your early investors. And so that's really important. And actually with our chairman and lead investor, Søren, we didn't speak about the business at all for the first half hour. He didn't know what I was doing at all. We were just chatting, having a good time, and that's that it started. And then after this, okay, now he's interested in actually getting to know what I'm doing. But that is like the very basic. So I'd say really focus on the lead investor, because after that it was a lot easier. The other investors that we have, I went out and contacted them directly. We knew that we wanted to do a matching loan from Vækstfonden. So I went through the list and I just started from the top, looking, are they impacted the match with us? I'll just contact and say, hey, we have a lead investor, do you want to invest? And then for the rest, we also have Johan Bülow as one of our investors and in the board who...
He's Mr. Licorice here in Denmark.
Yeah, he's quite big.
And Denmark is... Also, I mean, Denmark is as serious about licorice as, let's say, Germany is about sausage. So licorice is a big deal here.
Exactly. And yeah, so I also contacted him on LinkedIn, and he has invested in Rockstart. And I'd say, okay, Rockstart is joining in on our fund. And again, then you have the validation that our team is somebody you want to work with. And that's kind of how I got invited for the talk. I only met him once, and he put in quite a big investment. And the reason that it was possible to have him invested after one meeting is that he trusted in our other investors.
Yeah.
Artem, jump in on this one. Why did you invest?
Yeah, good question.
Were you part of this investment? Sorry.
Well, I hope for many more rounds going forward, but initially, again, as we said, team is crucial. 70% of our decision making is based on a team, and then again we're looking into business model, into the market, etc., etc. But we again start meeting the founders, and that's where Råhandel stands out, and that's why we found it an interesting case for us to look into. But sorry.
Go.
No, I was saying that actually, as we said, the validation is a key, and it starts really early on with the first introduction. That's where the best deal flow comes in. I must say, around 60% of investments we do are coming as referrals from our partners. That's a very strong validation that the person we can trust recommends a startup to us. That's a strong start.
Yeah. So this trust thing, I'd love to dig a little deeper in this and maybe get some of your feedback and similar experiences, because I've seen this so many times. I've seen a friend of mine, his first investor was his wife's uncle, and that when they eventually sold the company and paid out back to him, and he called him up to say that he was going to be getting a payout, he was like, oh, wow. And he said, well, this is a validation of our original plan, yada yada yada. And he was like, oh, to be completely honest, I didn't understand your original plan. I didn't understand the product, but you're a really nice guy and you're smart, and so I trust you. And I think of another investment where I saw where it was somebody he had just sold a car glass company, as in a company of guys in vans that come around and replace your front windshield while you're at work. And that was their product. And the next thing he invested in was this online collaboration tool that was software as a service. I mean, it was completely opposite. Yeah. But when he met the team, he was like, wow, they're really smart. They're really cool. I don't completely get it, but I trust them, and it's not a huge ticket. So it's, the trust is the number one thing. And you meet, how often have you met when you were talking to, if you've raised money before, but I think it's the trust is the key, and whether it's a perfect match with the product and the business model and the yada, 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 it's the people.
I mean, people is not enough, but it's the basis. That's like you need to have a personality match, and then after that you can see if there's also a business case match. But
yeah.
I agree. We have raised a small ticket with a private investor in December last year, and that's definitely due to the team that we have more than the idea and the business, because he's not in software or in sustainability in general. But I think what we are addressing here is common issues around raising money for startups. What I would really like to understand is when in the process do you actually evaluate the impact that these SDG startups are doing? Because I didn't hear that in the flow of how to get to talk about that. Because I do agree on everything that you're saying, that it's the team first, then the product, then the business model. Where does the impact come in?
Great question.
So for us at least, and for us, we're only looking for impact investors. That's all we think are interesting. And on the other way, it's a hygiene factor. So you don't invest because we are an impact startup. That's not a validation. It's necessary. It's a requirement.
Yeah, I think that's very true. I think Actually, looking at our portfolio, I think we've done 2 investments that are impact, what you could categorize as impact. And we're not. I think it's also very, very important to remember the fact that investors are not necessarily looking for impact investments. Investors are just looking for investments. If that case happens to be an impact case, nice. But as you say, it's a hygiene factor. It's not necessarily I'm looking for it.
Well, all right. So all money's green, and an awful lot of the people that that were saying tobacco investments are super important for pension funds because they pay a really steady dividend, and now they're getting out of tobacco and they're getting out of oil, and suddenly, funnily enough, it seems to match where it's convenient that they that those things are, and they say impact when what they're really doing is getting rid of them because maybe they're not making a lot of money. What's your take?
So I just want to say that's also why you need to be critical as a startup CEO from an impact startup when you raise. At least for us, that's something that we've been very focused on. We know that we're not going to go through the whole fundraising process. We're going to be diluted a lot. And it's important for us that the culture will stay the same, that they will still be an impact factor. And therefore, we are only looking for investors that do impact investments and where it matters.
You spend a lot of time talking to these investors, right? How much time in this match? It is like getting married. It is, it is taking an extra person into the company. The money doesn't come for free.
And it's more than a marriage. You can't get divorced like that, right?
Well, it depends because it depends on where you get prenups.
Okay, you're right.
Right, there's a lot of ways of doing this.
I think it's extremely important that there's a match between the investor and the startup and the founder, the team, absolutely. And I agree. I mean, we are also looking into investors that has this focus on impact, that where it's not just something that's nice to have, but where it's actually a focus, and really trying to push this agenda, which is one of the challenges, because not a lot of, it's not a common thing to do in the investment environment. Sure. There's not a lot of knowledge around it either.
Yeah. This Artem, what's your take here? You guys, how do you work in impact into? Is it a core piece, or is it a piece of your portfolio, a portion of your portfolio?
I would say it's a core piece. We're looking into as many impact startups as possible. That's part of our investment thesis, something that is really integrated into it. But I can say about my experience in general, as we see in agri-food, more and more investors driving into this sustainability agenda. And when it becomes a hard criteria to get in and get the funding, then in my opinion, it becomes a problem, because some areas become underrepresented, like, for example, traditional animal farming or poultry industry. Lots of money going into alternative protein, into different decarbonization initiatives. But still, we should look into other areas as well, and I think that's very crucial. So what I try to say is that not in all cases it's only about having a good match with an investor, but also with its investment thesis.
All right. Now that we're Josephine brought out it's harder to get divorced than it is to get divorced if you marry normally. But all right, so let's talk. Let's maybe get into some of the details. Let's see, in our prenups, in our founders' agreements. I mean, did you write this purpose into? Do you guys have founders' agreements?
Of course.
Yes.
Excellent. Not everybody does. This is an internal prenup between the founders, for those of you that just in case you're wondering. And is the impact piece, is that written into your founders' agreement?
In ours, it's not. But we only have team members who want to create a difference. So we're focusing on creating better conditions for small-scale food producers and more transparency in the food system. Our investors and our team members are not necessarily passionate about that subject only, but they want to create a difference.
But so it's in your hiring process. It's implicit, and it's in.
I mean, we have it in a founders agreement in the deliverables for each of us, that we are enabling sustainable travel choices, and this is the goal, and this is the reason why Tripdoodler is here. But I mean, it's mostly a legal document explaining the terms, right? But we have, even though we are still this early, we have a very clear DEI the policy, and we have
a couple of words on that.
Okay, it's diversity, inclusion, and diversity, equity, and inclusion, and it's basically that everything we do in Tripdoodler, how we engage as an organization, has to have a focus on diversity in many layers, and how we build our product has to have a focus on diversity as well. So every time we do a design decision in Tripdoodler, we think about how we engage that for minorities in whatever aspect is relevant in that case.
Cool. Do you see this written in to your documents, into your term sheets, into your shareholder agreements, into your, like how far does the impact get in? Because at the end of it, because it's easy to be, when everything's going good and we're all friends, it's easy for everybody to agree about everything. Contracts, and especially founders' agreements and shareholders' agreements, are there for when we need something, when we need rules, when we disagree. And is the impact written in there?
For us, at least in the investments that we've done, I've not seen impact written into term sheets or shareholder agreements. However, I think that this is where the trust comes in again, because this is why you need investors who are aligned with first of all the goals and the targets that you have, the purpose that you have also, and but also the culture that we have today. Because as you mentioned, Solveig, it's very, very important that whenever we put in new investors, we also bring in different perspectives, and that is of course very, very good at most times. But also, it always challenges the culture that is status quo in the company. So what actually we do is, getting back to your question actually, in how do we actually rate impact? Because there are cases where the business model is somewhat subsequent to the what could you say, the social impact that the company has. Yeah,
the focus is on the impact achieved more than the money made.
Yeah, it would be, yeah. It would be for these cases as the money would, for some SDG startups that we're looking at and that we're working with, they will not be able to make any profits within the next 4 or 5 years. And as an investor, you just have to be aligned with the fact that we're not going to make any profits.
And you've got an interesting model, because we were talking about this, and I'd love to get into some of the specifics of things we count, because if you count something, you get more of it, is you have a different, an awful lot of most VCs go out, raise a bunch of cash from limited partners, then they have 5 years to invest that cash, and what they promise the people that are getting the money from is they will double it in 5 years.
Yeah.
Okay, so that implies a time pressure, and it's why VCs, right, why you guys are usually, you're eager for the startups to get going and get somewhere. Yeah. But you have a different model where you raise money for each company you're investing in, you raise it separately from partners.
And actually, we've raised a few funds back in the days for a company called Nova Founders Capital. And so we've done that before, and we've had investments come in from funds a lot of times. But what we've seen is that now we've had Goldman Sachs, we've had Alibaba Bank, we've had Peter Thiel Bank, who founded PayPal.
And these are very, very capitalist, very aggressive, very high growth now organizations.
Yes, but we also had the World Bank, which is very, very contrary to that. Right. So, and that also, it creates a lot of tension when you have both Goldman Sachs and the World Bank, but it's another issue. But what we've learned from doing that, when you have such conventional investors in your board, is, first of all, they're not very much prepared to your board meetings. Our cases have not meant so much to the conventional investors as we've had from private investors. A good example is that we have Lars Thusen, who's the founder and also owner today of Basis Bank, one of the largest corporate banks in Denmark. And he's not invested any money, but he's invested so much time into us, and that it just means the world to us compared to the money. Of course, money is necessary for our growth, but the competences that he's had and that he's brought into, now it's Samlino that we have in Denmark, one of the largest financial comparison platforms in Denmark. And that's just meant so much to us to have him. So in CVX, what we do is that we have a team of analysts and also investment managers who look at cases, and for each case, if we were to invest at CVX and if I were to go into the board, I would not be able to add as much value as a private investor could do. and that's just the core fact, and that's also the fundamental behind CVX Ventures, is that we go together with private investors. We do the analysis, we do the due diligence, there's both the commercial and the financial, and also the sort of the legal and we say the official. But we always look for investors to bring in the competencies to actually add value other than the money.
All right. When I asked, we had a quick chat before, and you guys mentioned numbers and KPIs. I want to bring in Artem, and also because you're in Amsterdam, so I can't quite reach out and grab you. But I'm going to ask sort of how you deal with this and what you're measuring. What you're measuring, because the things we usually measure are sales, growth, 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 growth. But this is impact. So what else are you measuring? And then come back to here in the studio where we're on stage, where we've been talking about this. Stuff you count, KPIs. Lawyers count billable hours, and lo and behold, they get lots of them. What do you count?
That's a very good question, Nick, because the nature of our investments at Rockstart are rather early. So we begin in seed and pre-seed stages, beginning working with startups, investing in them, running through our 6-month program, and then following on. When we invest in startups, we look into, well, first of all, as we said, team. We look at the business model, product market fit, very qualitative factors, I would say. Because normally what we see is that startups they can't really show real traction just yet, working on the market, working with the customers, especially when we're talking about startups with a very strong R&D agendas that are driven by research. I'm talking about companies.
Let's say once we get past the writing the check, what are you counting once you've written the check? What are you looking for?
Once we've written the check, our model works like that: as we start working together closely for 6 months. We define the hero metrics, and for some startups, they're different than for others. As for example, we have a composition of portfolio companies that are working in biotech space, or some with consumer products.
What about cows? You mentioned dairy earlier, right? And so, here in Denmark, we've got an awful lot of cows, and so it's liters milk per cow per week. How long can we? What are you measuring? The lifetime of a cow. One of the things they've done in Denmark is be able to stretch the viable lifetime of a cow. More money per cow. Got it. What do you? Let's say in dairy, what are you looking for from the startups you work with in that space?
I can give an example. Last year, we invested in a company called Move Farm, as a value proposition of which is to increase the yield of milk per cow in emerging markets to the level of European cows.
Cool.
And that was a very strong value proposition from them, because the difference is very, very big. So closing the gap was one of the hero metrics that we've been looking into. Because that's the core of their business, it's the core of the value proposition. But also we're looking into how can we make the startup better, how we can close certain issues that they experience. There is a lot going on into it, lots of time and effort. Of course, we work with external partners as well, but that's what distinguishes Rockstart, how we can support startups on a long term with that.
Cool. You guys, numbers.
How we measure our impact?
Yeah, exactly. Because Volkswagen can say, we're having a great impact. You can now drive further in your diesel car. Maybe that's not what we're looking for.
We're still really early stage in the sense that we do not have a fully developed KPI system of measuring everything. But what we have an idea about what it is that we want to measure and how we want. What it is that we are looking for, the impact that we are creating, and we've created this funnel on what is the outcome and what is the output, and eventually the impact. But I think if you ask a very early stage startup to do a full KPI measurement.
Not fully, but let's say we're all counting something early on, And so let's say your consumers that come to you, what are you showing them?
But we have what we are in the product, Because I think, I mean, we have a triple bottom line that we work with, which is focusing on planet, people, and profit. So we are measuring on all these three areas. When it comes to the consumers that comes to us, we give them the opportunity to plan more sustainable travel, and we are measuring how many travel plans do they do, and how much carbon emission are they reducing, and stuff like that.
Okay, so their footprint per person per trip.
Yeah.
Cool.
So yeah, we also work with hero metrics, which I think is preferable to, for example, measuring CO2, etc. And our hero metric is product turnover.
What was that word again?
Hero metric. So
hero. So
hero metric.
All right, hero
kind of
metric.
Weird word,
Gotcha.
but it's just another metric than turnover. So in our case, it's product turnover. So we measure how many goods have been traded through the platform.
From your small and impact, you bring, just because it's actually a really, really cool idea, is that, you know, in supermarkets and big markets have a limited number of things they can put on the shelf because they only have this many, X amount of shelf space, and they got a huge amount of work in dealing with all of the people that deliver to them. And so dealing with very small providers is really difficult for them. You gather all those really small providers together.
Yes.
And take care of managing the bazillion small providers and let them offer more, and you let the supermarkets offer more variety.
Yeah, so we also enable trade between independent restaurants, for example, and small food producers. But where we see we can make the biggest difference is between the chains. So that will also be canteen chains, hotel chains, supermarket chains, and the small food producers, because it's just different worlds. And that's where, it's logistics and payment, etc. That's one thing, but a lot of it is just about matchmaking data and fitting the needs of the big chains into what the small food producers need, and etc. So just making the two worlds meet.
And so instead of counting, let's see, revenue growth, you're looking at number of products that you've been able to add to your platform.
No, it's
or
I think
products shipped, or
no, it's products traded, or in product turnover is just not the number of products, but in the currency. So for us, it's in Danish kroner. How many products have been traded through the platform that given month? And also how many active purchases has there been, and how many active producers. That is what we measure.
Cool. So measuring different stuff, what are you seeing as, like, let's see, with your two impact investments, is there a difference between what you're counting there with what you're counting in your other investments?
I think there's a difference in what we're counting in all investments. So I think that's the first sort of acceptance that we have to do. What exactly that we do is that we don't go in and set targets for our companies. They set them themselves. And I think now we're talking a lot about KPIs, etc. And for us, at least in CVX Ventures, we have no KPIs, because KPIs, as the name indicates,
you have a goal. There is something.
We have goals, but they're all they're not performance indicators. They are you know. What could you say? They are targets. They are actually driving profit, or driving change, or driving investments,
things
or driving
you'd
whatever.
like to achieve.
I think we like to achieve, yes. Yeah. So it's not sub targets, because you could be on target for all your KPIs but not reach the goal, and vice versa. So what we do in all our investments is that we encourage the team to actually think through what is the most essential things that we do in our company, and how can we measure that over time. Yeah. And I think also another thing is that we've seen a lot of companies, also in CVX, where we do a lot of targets, but we don't set them in respect to, first of all, time, but also, second of all, our own potential, because this is another thing when setting targets.
All right. And how early was this discussion between you and your investors?
I think it's been good. I think for early stage investors, that they understand that you need to have independent measure, like key performance indicators for each company. It gets a lot more difficult when you reach your Series B, Series C, Series D stage, because you need more traditional measures, of course. So
So for example, I mean, like you raised your A last year.
No, seed round last year.
So you raised your seed round last year, so you've got an A round coming up some point within the next 12 to 18 months. What are you getting? Can you give an example? Because we talked about what you're measuring right now. Do you see a change coming in the A, or will it be between the A and the B?
I think a lot of what we measure now will be the same, but we can see, so we're only looking for impact investors. And when you reach the bigger funds, they need to also, to tell their investors, other funds again, what they have invested. So they need, for example, how much have you reduced CO2, or how many employees that would normally be outside of the job market has been employed to the company. And we can see with us, it's hard to fit into that standard KPI. Yeah. And that can be really, really difficult when you reach later stage impact startups, I'd say, or scale-ups.
Cool. Josephine?
It's actually also difficult when you're very early fundraising in the beginning, because the question never comes up.
Yeah.
The way that I'm measured when I go out and pitch and talk to investors is the standard pitch. It's a 3-minute. It's about my team. It's about my vision, and it's about the revenue. It's never about impact. No. And unless I actually force it on the agenda, which is something I think it's really. I would really like that we include. I mean, at least a question, because I don't necessarily have all the answers to how am I going to set up my hero measurements and how is that going to look. But I have a very clear idea about that is something that is extremely important for me, and it's a part of my success measurements. It's not.
And I swear, and it's also, I use a lot of dating metaphors when I talk about investors and startups, because there are, almost as many startups and investors trying to find each other out there as there are people trying to find each other on Tinder. And those matches are often incredibly random. The cool thing, though, is that, unless you're, whatever, Hugh Hefner, you only need one, So somewhere that match is out there. So a lot of times it is just about doing enough swiping. What do you see about the development, Artem, about the development of the things you're counting as you go along, and the challenges, and how what you're counting changes?
Nick, what kind of challenges you're talking about?
What's that? Sorry.
Can you repeat the question?
Certainly. So as your investments, as the portfolio goes, let's say early stage, there's often, yes, you're looking at the founders, and a lot of times you'll be flexible with what you're really counting because you really like the team, but what you're counting as the company develops in the portfolio. Let's say, how does that change between, let's say, seed or pre-seed and your A round? What numbers, what factors do you see change?
Yeah, definitely we experience the changes in the due diligence that we do, because obviously when we invest early enough in pre-seed, we look at certain things. Most of our due diligence is around the team and how well they can translate market dynamics into scalable business opportunities. Later on, we look into things like how well they can forecast or progress with the forecast that they did, both in terms of impact delivered and in terms of traction working with the customers. It's just one example, but also much more into that about investment dynamics. Or if we talk about CEO, if the person develops him or herself into the role of a leader, being able to attract talents, be a magnet, that's very important.
That line on forecasting was excellent. I mean, we do make, one of the criticisms one has of publicly listed companies, or companies that are on stock exchanges, is that they are very focused on the quarterly reports, both the companies and the markets. And yet at the same time, the ability to correctly forecast is also an indicator of how aware you are and how well you're running the business. Yep. For you guys, let's see, with your investors being measured the other way, and of course you can't probably say anything rude about Artem because he's right here, but yeah, the how you're being measured.
No, I think there's different indicators. So of course we'll also be measured on, our key performance indicators, product turnover, just revenue in general. But there are also more broad things. For example, we just launched our new platform. How did that work out? We said that we would hire new employees. How are we on track in terms of doing those hires, finding the right people? So it's more broad in terms of. But I do think that it is very difficult with forecasting, especially when you're very early and there is a lot of uncertainty. And that was just one of those pills I had to swallow when I raised. So I was really, really trying to say, we cannot do a proper forecast, we cannot do a proper financial model, especially not a 3-year one, which is expected.
The hockey stick, yeah.
But it's just one of those pills that is hard to swallow, but it just needs to be done.
All right. If we could, I've just gotten the sign, we've got 1 minute left, so we get a super quick final comment for you, and I'd love to span from like early stage to later stage. I'll go first and I'll cheat because it's my panel, I'm the moderator. And I'll say that if you were super early stage and you think you know nothing about this, you do, all right? Tinder is not that far away from this process, you know? There's a lot of swiping. You don't have to go with the first investor you see. Have a look around, do a lot of swiping, and a lot of the same things matter there. Trust is key. Artem, I'll let you go first, and then we'll take it around. What, you had one last final piece of advice. Well, let's say how to approach this. Or let's say how to approach raising money and from, let's say, seed stage onwards.
I think I want to compliment on Solveig's comment because I think it's very important to be realistic about what you know and what you don't know. So that would be my piece of advice.
All right, cool. Josephine.
I also wanted to say that knowledge is king as well.
Knowledge.
You need to, yeah. But I guess what I really want to say is that this is a journey. Sustainability is a journey, and none of us really has the final answer for anything. So I think engaging in these kind of conversations between founders and investors and trying to educate ourselves on the way and learn from each other is probably the right way.
Right. Even Google is still spends a lot of time on investor relations. You'd have thought they had, but there is no there. It is a journey.
It is a journey.
All right. Cool. Solveig.
So actually, my last recommendation is the opposite of yours. So I think it's really, really important that, of course, you go talk with a lot of investors, swipe a lot, but you should be very focused on who you contact.
Right, so you went through that specific list at
But also, I spend so much time talking with investors that were not potential lead investors. You need to be very aware that you're looking for a lead investor who can bring the round. I had such a hard time finding lead investor because I was just looking everywhere. And then once we had the lead investor, there were so many investors who wanted to join in that we had to say no to so many. We're still saying no. So just focus on that lead investor.
See, now, again, back to dating, I think like it was really funny in high school how like as soon as you had a girlfriend or a boyfriend, then all of a sudden you were super more interesting to everybody else. But so there's always a dating metaphor. But I like that. You say, look for your lead investor, and finding the other ones will be easier after that.
Yeah.
Cool. Final words.
Yes. I think, first of all, I agree with you two. I think it's very, very hit on the nail. For me, yes, knowledge is king. That's the first. But then I think the second is that network is king, because there is no Tinder for investors, so you need to find them yourself. You need to do the introduction. You need to go through all lists, but be aware of whom you actually contact, because as you mentioned, you need to know, if I contact an investor, which I know is not going to be interested in me, I'm just going to burn one bridge. And essentially that person, he himself or her, might not be the exact investor for me, but he or she might know anyone who could be potential investors. And so it's just very, very important to keep bridges, even though you say no. And also vice versa, when we say no, it's never no.
So there's a lot of frogs out there, and you need to kiss a lot of frogs, but now might not be the time to kiss that particular frog.
Yeah.
Cool. All right. Do we have time for a question? Not so much. Sorry. But the good thing about you being here in the room is when we turn off the feed, bam, they're all yours. All right. Cool. Thank you very much. It's been a lot of fun. We'll be back in 15 minutes with another panel. Thank you.
Thank you.